Ladies and gentlemen, good day and welcome to Bank of India earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us today Mr. A.K. Das, MD and CEO, Mr. P.R. Rajgopal, Executive Director, Mr. K.V. Raghavendra, General Manager, Finance, Mr. Sankar Sen, Chief Financial Officer, and other senior executives of the bank. I now hand the conference over to Mr. A.K. Das, MD and CEO. Thank you, and over to you, sir.
Thank you very much. Good afternoon to all the analysts and investors who have joined this conference call on our Q2 numbers. We extend to all of you a hearty welcome and thanks for taking your time. Most of you, I believe, are aware of the numbers and the necessary papers have been circulated, the presentations and the numbers. And you all would have seen the movement in the market also today. It was quite encouraging. Market response was very positive to our Q2 numbers, which we believe are predominantly driven by two main reasons. That is, one is improvement in our operating efficiency, which was triggered by reasonably good growth in the top line, especially in the RAM segment, and improved net interest income, both Q-on-Q and on sequential basis, and margins. And as a result, our operating profit sequentially went up by 9%, and Q-on-Q it was 26%, and net profit almost had a 100% growth Q-on-Q, although it was less than Q1 profit after tax. The second major highlight is about the way we have addressed asset quality issues. Our gross NP ratios and net NP ratios, they have been brought down significantly, and also in absolute numbers, we find the gross NP and net NP numbers are on a progressive decline. PCR at about 88%, and this year featured certain challenges for us, especially Q1, where we saw a relatively dry spell, especially in the realm of recovery. But Q2, we have been able to pull it back to some extent, and our cash recovery and upgradation in Q2 has been almost more than double that of in Q1. This we had to do it in a very strategic way so that we can recover as much as possible the moment we saw some movement at the ground post-COVID. Secondly, if you look at the provision numbers also, we got about 2,300 crore provision made out of our operating profit, as compared to 1,500 plus in Q1. The major part, of course, is core provision, but added to that is another 783 crore, which we have provided over and above what is mandated. These 783 crore included certain accounts which are sub judice, directed by court orders, or the 76 circular, and also SMA 012 accounts which were provided moratorium. You may recollect in Q1 when we shared our numbers, we had mentioned about 1,034 crore, 10% we had done provision and this SMA 012. Now we have done similar provision this quarter also. This will give us the benefit of absorbing future shocks, if any, from any of the accounts. And number two, this will also give us good leeway to write back our provisions already made. So in a way, we have endeavored to safeguard Q3 and Q4 from any kind of possible shock. So this is, in a nutshell, is a high point of our balance sheet this time, and because of this additional provisioning, I think but for that our net profit would have been much higher. But we, as a prudent measure, we decided to go for providing for these accounts so that Q3 and Q4, the impact, any kind of adverse impact on our P&L will be minimum. And this is in all about Q2 numbers. Our margins have improved, although they are below 3%, but sequentially they have improved. And despite passing on rate cuts to our huge segment of our clientele base, and we are sure that we will only improve this margin further. And our business growth also has been ahead of the industry curve. We have done even much better than the industry in business growth, almost in all segments. So going forward, I believe we got a target of about 8 to 10% growth in deposits and about 7.5% growth in advances. That's our terminal target for this current financial year. And as regards asset quality, we aim to come below 12% in gross NP ratio, and around net NP ratio will be below 2.5%. That's the March 21 guidance from our side. With this brief introduction of our numbers, I will invite your questions, your suggestions and guidance pertaining to Q2 numbers. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. The first question is from the line of Bhavesh Shah from BNK Securities. Please go ahead.
Hello.
Yeah.
Hi, sir. So thanks for the opportunity.
Yeah.
So firstly, sir, can you give us the collection efficiency for the month of September and October? Overall and across segments.
Collection efficiency. Yeah.
Bhavesh, the collection efficiency, if you see our, it has got a correlation with the slippage ratio that we have. And in the last 2 quarters, our slippage ratio is around 0.08%. Even if you factor in the accounts that would have otherwise been marked down and not marked down, so our slippage ratio is around 1.14%. So the collection efficiency accordingly you can calculate, it is almost 86%. Okay.
Sir, sorry to interrupt. So, sir, by collection efficiency, I mean demand raised for the month of September.
Yeah, that's what I'm referring to, Bhavesh. I understand that.
Okay.
And see, what happens is, post the moratorium, the September demand is raised. What happens is, it is also getting reflected, because I am just trying to give you numbers such that you are able to verify that. So what happened in the case of our bank is, we had around 66% of the loan book under moratorium at a particular point in time in August. Okay?
Okay. Yes,
now
sir.
that has come down to almost 33% in moratorium levels. So in September when demand was raised, okay, so there are 2 things. So slippage actually was, technical slippages were there to the extent of 0.08%. Okay?
Okay.
So if you calculate even say 10 bips down, so the collection efficiency at that point it was 90%. So what I have done is I have actually added what otherwise would have been NPA in terms of in the absence of a Supreme Court stay. So that would add up to another 4 or 5 basis points. So our collection efficiency has been around 85%, and it continues to be so. Historically, it was like this. It continues to be so. Okay.
Okay, sir. And sir, of your exit moratorium of 33%, what share of customers haven't paid any EMI since starting of moratorium?
See, that demand is raised. See, what happened is, I am referring to this 33% without actually, the amount being due. The amounts that were otherwise due in the month of July, August and September was paid by all these people. So the September demand, the remaining accounts, it got postponed and back-ended in the case of EMIs. Okay? Some of them got converted into FITL. So the demand for September will come only we raise normally demand on the 10th of every month or so it will get credited in 31st of October or so. So we did not see much slippages in 31st of October and all. That comes to a very small amount, which I have already told you, saying that around 900 crores or so, which was otherwise NPA as on that date of moratorium, continues to be so.
Okay. And sir,
you could make out what I told you?
Sir, broadly, yes. So, sir, I understood that 8 bps would be the technical slippages, which have due to Supreme Court. So, can you quantify that in number?
Number of what? Number of
advances as of absolute amount, I mean.
Absolute amount in terms of slippages you're talking about?
Yeah.
Slippages, that's what I told you, around 950 crores.
950 crores. Okay.
So that if you calculate back end also, the GNPA levels also would only go by, say, another 10 bits, not beyond that.
Okay. Okay. And sir, additional provisioning that you made during the quarter, 783 crore, I understand those will be mainly specific provisioning against SMA 1-2 accounts, 76 circular and court order. Sir, so from how much SMA 1 or 2 accounts do you expect that they'll slip immediately? Some definitely would be the slippages, technical slippages, but from the rest, as in any ballpark figure?
See, we did not see much slippages even during the time, because I have told you last time when we did we met in the first quarter results. I told you that we have done an extensive study of the stress at the borrower end. Okay. So what we have actually found out was whatever SMA2 slippages that we normally have, around 8-9%, that continues to be with or without the COVID stress. So that continues to be there. Our SMA2 book is around 2,500 crores or so. 2,000 crores now. So 2,000 crores, then around 8% of that you can calculate straight away. That is the slippage, and it is not more than this.
And in this, about 1,601 account only.
Yeah.
Okay. And sir, any restructuring requests that you have received so far, and how much restructuring do you expect?
Restructuring, what is happening is, it's a very typical book. If you see the slides, you must have already seen our slides. We have got around 46% in A and A plus rated book, and we have got around 27% in government book. So that constituted around 73% of the book which doesn't require moratorium. Okay. And the remaining book is 14% is small loans, and the remaining are all BBB and BBB minus book. In that, if you see that we have got around 5,000 crores demand for restructuring. That comes to how much? Say in the standard book we talk, say 3 lakh crores of standard book, 5,000 crores. That comes to around 6%. Okay.
Okay.
So that's what the demand is now. So I don't see much restructuring happening in the book as such because of the nature of the loan book we have.
Okay. Okay, sir. Thank you.
So for retail and MSME, I have already told you most of it they don't require restructuring because most of them have avoided reschedulement or FITL or GECL loans, and so they have not come forward for any restructuring as such because of the CIBIL issues.
Understood, sir.
Okay.
And sir, just last question, sir. So how much has been disbursed so far under ECGL scheme, ECLGS?
ECLGS. It's
Yeah.
about GCL. I'll give you the figure. 5,600.
You can take a ballpark figure around 5,000 crores, 4,800 crores.
4,000. You can take it as 5,000 crores.
Yeah.
4,000 crore has been disbursed.
5,000, yeah.
Okay, sir. Thanks a lot, sir. That's it from my side.
Okay, thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Sneha Ganatra from Shubham Ventures. Please go ahead.
Sir, my three questions. Just first wanted to know, how are we seeing overall recoveries and the upgrades for the second half? Are we seeing any recoveries upgrade from the NCLT or under OTS? My second question is, what would be your credit cost guidance for the second half? And any slippages granted we can expect for the second half?
Credit cost guidance, as far as it goes, I think we're at 2.33. It was 1.74 earlier, and because of additional provisioning, as I mentioned in the beginning, it is 2.33. Our aim is to bring it down below 2 by the year end. And NCLT, out of total 56,200 crore, about 39,000, almost 71% are in NCLT. The proceedings have been very slow, or it has been stalled sort of for most part of first half. So that way we could recover only about 150 crore in the first half. Second half we are expecting a resolution resulting in about 700 crore of cash recovery and NPA reduction of about 3,000 to 3,500 crore. This apart, ARC sale, which was not happening for various reasons, we have started. We have seen some interest in some of the ARCs, so that way we have kind of estimated a sale of roughly 600 crore. So in all, the aim is to effect NPA reduction to the tune of 12,000 crore, of which we have almost done 5,800, and remaining 2 quarters, this Q3 and Q4, we will try to bring it down by another 6,000 crore.
And this you have considered whatever the slippages we are expecting from the restructured book also?
No, that is not there. There is no significant portion. There are no concerns that way. Restructuring book, because we are already provided for those restructured books upfront, 15%, so there is no problem. And as Mr. Rajgopal was just now saying, there is not much of an interest shown so far in restructuring part also. So we have not received any proposal. So that way we are quite cushioned off, well cushioned from those kind of stress.
Okay. And my last question is, any plans for the capital raising or any plans to sell off any of your subsidiaries or anything?
No, subsidiaries, there are no plans and not as such, but capital raising, yes, we have got board approval last month. Last August we have got board approval for about 8,000 crore of capital. We are reasonably capitalized, but again, when the loan growth starts picking up, we will require capital, no doubt. So by end of December, early January, we are planning to go for it through initially 81 instruments and thereafter QIP, adding up to maybe around 2,500 crore.
2,500, right?
Pardon?
How much QIP which we are planning to raise?
About 2,000 to 2,500 crore.
Okay. Any target for the margins?
Margins will be a little above 2.75 or thereabout, because margin pressure will continue. I think slowly the paradigm of margin is changing in India with a lot of requests and advisories to pass on the rate cuts and all. So naturally the margins uptick will be on a limited scale. It would be great if we can retain the margins also.
And how are we seeing the overall deposit traction coming in?
Deposit traction is very buoyant, as in case of many banks. So, and for Bank of India, we have grown much faster than the industry as far as deposit growth is concerned. our deposit growth domestic year-on-year is 22%, as against banking system 5%. This is as of September 25, till which RBI data is available.
Right.
Similarly, our deposit YTD from April till September is 10%. Banking system is 5.5%. So liquidity-wise, there is no issue. Got a strong liability franchise. Keep us going. And CASA, we are maintaining the June level also at about 39% plus, 2,07,000 crore.
Okay. And my last question is, how are we seeing the treasury income to be panning out going ahead, considering the yield movement remains stable at this level?
Yeah, I'll hand you over to our treasury head. Yeah, Hari.
Yeah, the treasury has done well in the first 2 quarters, and with the yields remaining.
Are you able to hear him out? Is it
Yes, sir.
Okay.
Yeah. With the yields remaining benign, we expect that the performance would be similar in the next 2 quarters also.
Okay. Got it, sir. Thank you.
Thank you.
Thank you. We would request the participants to please press star and 1 to ask a question. The next question is from the line of Ashok Ajmera from Edgecon Global Services. Please go ahead.
Sir, good afternoon to you.
Good afternoon, sir.
How are you, sir? Congratulations to you for yet again a good quarter in spite of the challenges which is being faced by the banking industry. The net profit is of course impacted because of the very high provisioning which has been done. The provisions have up tremendously as against 766 crore to 2,134 crore, which I may call it as a prudent measure taken by you. Sir, I have a couple of questions and some clarifications. There is a depreciation on investment of 252 crores. So can the Treasury GM can you throw some light on it that in these good times, what is this depreciation? Why the depreciation has come in the investment of 252 crores?
Yeah.
This depreciation is not on account of diminution in value of GSEC. It is basically the additional provision we were required to make on security receipts, where the net present value, there was diminution. That was the major component of that 280 crores.
Okay, so it is mainly on the provision for on the GSEC, which you are holding.
Not GSEC.
Not just GSEC.
Security receipt.
Security receipt. ARC wala.
Yes, sir. Okay.
Yes.
हाँ SR वाला. SR वाले में 8 साल के बाद हमको full provide करना पड़ता है ना अजमेरा जी. हाँ तो फिर.
No, I just saw because everything was positive. This point was only looking little negative. So I thought let me.
Yeah, actually वो investment में depreciation बोला जाता है, asset side में provision बोला जाता है.
Yes, sir.
Provision.
Sir, now can you give throw some light on this NCLT future course of action because you have got almost about 39,000 crore in the NCLT out of the total 56,232 crore of the NPA. I mean the amounts are blocked there.
Yeah.
So what is immediate next 2 quarters you look at? How do you look at it from the NCLT? How much recovery can we expect from these accounts and also the return of accounts?
In NCLT, we are expecting around reduction in roughly around 4,000 crores, and out of which 700 will be cash recovery and others by other mode. And it all depends when the things start rolling, because a lot of things are in an advanced stage. So we are expecting next 2 quarters there, Q3 and Q4, there would be a recovery, good recovery through NCLT also.
And the recovery from the return of accounts is only 411 crore. No, so the write-offs are 411 crores. On that, some color on that for the future as against 3,505 crores in the last quarter.
Last quarter, what we have done is in the write-offs, we have done prudential write-off of some of the big accounts. Like typically we had some of the corporate accounts which are already there in the NCLT. So we have done prudential write-off of those accounts. Okay, now this time whatever write-off you are seeing, we have not done any write-off. This is basically a percolated write-off due to OTS that is being given. So whatever cash recovery that you see on the first of the column, whatever is to be written off pursuant to an OTS taken is being reflected in the write-off today.
Okay, sir. And sir, going forward, I mean, you have given the target of the 7% of the advances, which was, I think, reduced from 8% to 7%, and bring down the gross NPA to 12% and then net NPA to around 2%. So, with this, you mean to say that the final amount of the gross NPA will come down to almost about like from this current 56,000 crore to almost about 52,000 crore at the end of March?
That is what we are aiming at. It depends on so many other things, but given a particular assumptions, we are aiming at this. It again depends. It's a dynamic situation, but this is our ultimate objective.
Yeah, because you see, if you add the 7% growth, then the advances becomes 4,36,000 crore. And on that, if you take out the ratio, this comes down to 52,300 crore, and the net NPA comes down to 8,738 crore. I mean, which could be a very good situation. Actually,
that is what we are aiming at. Actually, we hope. I think we will see good. NCLT holds the key now. Where out of 39,000, wherever we are lead is about 6,000 crore. About 4,000 crore remaining from RBI list 1 and 2, and rest are all by other banks. We are actively engaging with them. So as fast as possible, we are trying to resolve those issues.
So my last question is on, because I could not hear the answer of that first question some of the colleagues had asked. What is the situation on this restructuring front, the new window which has been allowed to restructure by 6th August circular? What kind of inquiries are we getting, and what is the kind of message which we are getting from your borrowers? Are they, I mean, how much, like in the moratorium period, the whole amount was 1,66,000 crore. The people opted moratorium in those days. Now, similarly, for restructuring, any idea how much, not number of accounts, but at least amount-wise?
See, mainly there are, one thing is very sure that there are only small and medium segment accounts are there. You would have heard in other banks also, similar trend continues. We had initially drawn up an eligible list of about 3,10,000 accounts, and of which about 70-75% are in the retail and MSME loan, and involving an amount of about 24,000 crore. Now, since the process began, as on date, we have got requests from only about 500 accounts. That too, corporate only very less, 34 accounts involving about 5,000 crore, and 474 non-corporate, 62 crore. I believe one reason could be people are in wait and watch mode, number one. Number two, since a lot of emergency credit lines and other options were given to the customers, probably they don't see a need for showing interest in restructuring of the accounts. This appears to be the case, but again, we have to watch it.
So considering the 10% provision, because majority of them are non-MSME, as you say, 5,000 crore, we can take 500 crore additional. So still the time is there till 31st of December, and then finally to implement up to March.
Yeah.
So can we take it something around 10 to 12,000 crore total restructuring?
उतना तो नहीं लग रहा है अजमेरा जी. I don't think उतना आएगा, because see, as on date,
I'm trying to judge the performance around 31st March basically, because so that we can arrive at a very good number to advise to the people.
Yeah, I agree. Only one thing I would like to tell you is the manner in which this particular scheme from RBI has come. It is not very attractive in terms of people coming forward for restructuring. They have already avoided rescheduling in many cases. Okay. Now you have the situation in the mid-corporate and MSME advances where margin relaxations are permitted. Okay, cover period relaxations are permitted. So all those things are permitted under the old circular, and they are not treated as restructuring. So many of them have availed that dispensation under the old circular, that is April 27 and May circulars. Okay. So this 6th August circular as such is not going to really gain traction insofar as my view is concerned. So as on date, the enquiry is around 1.6%, which I've already told you, of the total advances, standard advances. So I don't think it will reach any number that you are suggesting, because you are talking in terms of almost doubling the size in the restructuring portfolio. The restructuring portfolio, what we have, will continue to be there. And of course, MSME restructuring will continue if there is a requirement for MSME restructuring, because window is available.
And sir, in this restructuring, you are strictly following that Kamath Committee guidelines about the ratios, those 5 important ratios?
Yeah.
Okay. Okay, sir. Thank you. Thank you very much. I'll come back again if time permits. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Sushil Choksey from Indus Equity. Please go ahead.
Thank you, and congratulations to Bank of India team. Sir, it's very clear that Bank of India has done a lot of conservation, consolidation, and now the clarity is emerging where the roadmap is for future with a perspective of 12 to 24 months first, where the Indian economy will have clarity.
Yeah.
In view of all the proactive action, what is your guidance? You've already indicated the growth in terms of advances and deposit. What would be your outlook on treasury, credit cost, domestic banking, international banking?
Credit cost, as I told, it will be softening actually because we have done a lot of provisions, our PCR being 88%, so credit cost can go only one way, that is downward. Our aim is to keep it below 2%.
No, sir, but we are already at 1.67% right now. And
we are at 2.33, I think. Annualized, yeah. Okay.
Yeah, but so based on the first half result and second half, where credit cost may be much lower, don't you think you will outsmart the 2% guidance by mile?
We will. Yes.
Okay. What is the thought process on treasury, sir?
Treasury, as long as the accommodative stance continues and softening, because a lot of RBI intervention is there, and we believe that for at least till March 21, the rate cycle will continue in the same direction, and it will augment the bank's performance.
Seeing the yield as on today at around 585, how are we positioned in the treasury gains? Replicating first half or second half would be superior to first half?
The yields are expected to remain in the same band, say 570 to 620 band, depending upon various triggers in the market. As of now, there are no major mark-to-market losses, and if the yields soften further, we will have opportunity to book capital gains. In fact, we have done well in the third quarter also, and our numbers in the third quarter would be in line with the performance we have shown in the first 2 quarters.
I thought we should be sitting on a huge sum of unrealized gain. Where is the question of indicating a band about no provisions are required?
See, the book, part of the book is in HTM, part of it is in AFS, and it depends upon the construct of the book.
Yeah, so can you just throw a little color on that, please?
What exactly you are in?
Duration and activity on treasury side, on the corporate book as well as on the government security.
See, our total investment book is close to 1.8 lakh crores, of which 42,000 is non-SLR and the rest is in SLR. SLR of the 1,37,000 crores we have, close to 1 lakh crores is in HTM. So only 37,000 crores is susceptible to any kind of market risk. There we manage our duration and TB1 in such a manner that even if the yields move up by say 100 basis points, there would not be any major mark-to-market hit to our balance sheet. That was what I was trying to clarify.
Sir, my next question on digitization, which I've been asking you for last 2 quarters. Any roadmap or guidance on digitization by Bank of India? Because as days progress post-COVID, I think digitization is a bigger growth driver of businesses with work from home as well as customers' demand.
Yeah, that's great question. Of course, a favorite question for all of us. What we have done is we have just floated a RFP for end-to-end digitalization stuff, including both credit as well as in the customer acquisition. The process will be completed by month end, and then the rollout will start happening from January onwards. 9 months is the lead time for the end-to-end rollout. So you will find completely digitized with advanced AI tools and other facilities and all, completely revamped digital model in the bank by second or third quarter of 21-22.
That's great. And second thing, overall general question, so I'm not asking for numbers. Your experience with your consumer base, that is your customers on retail and wholesale banking, where are you finding more comfort, not from a lending point of view, but where behavioral patterns are concerned?
The comfort I find is, we have a good base of micro loan customers, bottom of the pyramid customers. We will have to actually look at how we actually design products for them and make them work for the bank, and that will actually has to ride on the digital model that we are building today. If you are able to have a good digital model for these micro loans, and the margins can be wonderful over there. We have almost quite a substantial portfolio there. So if you can get good margins over there, our NIMs and everything will change. So the refocusing is happening towards that kind of small ticket, good margin loans. We are also looking at typically, some of the micro NBFC, micro loan customers where we can do co-lending and co-origination with them, and then acquire more customers at that level. Because 2 things that is required with respect to that universe of customers, that we should be able to offer a good service, and then we should be able to give them the turnaround time that are world class. So both things will happen simultaneously. We will have a digital play in place by second quarter of next year, and then we'll try to target that segment of customers who are in the ticket size of 5 to 10 lakhs and 10 lakhs and below, that kind of customers, where we'll have volumes and we'll have margins also.
So does it mean also that co-lending policy which got announced by RBI yesterday, we would do it only after pure digitization is ready at our end, or we would initiate?
No. That is, see, today what is happening is we have got only one end of the model digitized. Like typically we have the credit underwriting digitized at our end. Okay, we don't have the lead generation and then the customer interaction digitized fully.
But as for the policy, I thought RBI now that will be left to the NBFC and the bank will become a co-lending partner.
Yeah. So once what happens is, this co-lending will start now, but it will pick up great speed once we have end-to-end digitalization in place. Because
Sir, sorry to interrupt, but my question is, are we ready now to do it, or we'll do it only post?
We are ready to do the partnerships now. And the full-scale mobilization of the business will happen in the second quarter, 21-22. Okay?
Okay. Second is, Bank of India has a huge strength where a lot of activities like capital market, trading community, which was an earlier base in the western region of India and specifically Bombay.
Yeah.
How are we trying to gain back that position?
That is precisely what I'm looking at. Basically what happens is we have lost huge amount of the business, especially, to ICICI and HDFCs of the world. And they offer most of the settlement facilities and clearing member facilities that they offer over there, which we could not match because of a lack of technology. Okay. So once we bring in the entire digital technologies and put in place, so automatically the customers will start flowing back. Today, the very curious case that we have is most of these capital market customers, they have exposures with us and have settlement accounts with HDFC. Unfortunately, because I am not able to give service because of the lack of technology and lack of digital play.
Sir, I would just add that
asset customers, but they are the liability customer of HDFC, which I would like to change. So the anyway asset customers, they'll continue to be our asset customers. However, they will also become our liability customers once we have the digital technology in place.
we would be reversing our position, which was as a title holder till 2000 back in 2021, where capital market was concerned. That's what I would assume from your statement.
Yeah, sure. That's something, that commitment that you can have from us.
Thank you and all the best, sir.
Thanks.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Jai Mundra from BNK Securities. Please go ahead.
Yeah, hi, good afternoon, sir.
Good afternoon.
Sir, I have a couple of questions. One is on your notes to account number 7, whereas we have given the disclosure on SMA/overdue category, where the moratorium deferment was extended. And there the amount is 64,598 crore, 599 crore. So, and is this the balance as of September 30th or this is the balance as of August end?
Batao yaar. Raghavendra sir.
Showing that number 7. Just 1 minute, Mr. Jay.
Yes, sir.
64 lakh note दिया है ना.
Yeah, Mundra, this particular part of it, this is as of September, my dear.
As of September.
Yeah. Now, what is relevant over there is the serial number 2. Okay?
Right.
If you see always, most of these moratoriums, they got really benefited out of this extension of EMIs and FITLs, the interest capitalization accounts.
Right.
That's what is correct. Yeah.
So now the line number 2 is these accounts are already 90 DPD or
they are not 90 DPD, Mundra. See, what is happening is the circular came much later. The funniest part that has happened with the RBI circular is, even though the relevant date for implementation of this moratorium was 1st March, okay, the circular came much later.
Right.
So by that time, the 28th February accounts have already slipped and became NPA at that point in time. Okay.
Right.
So whatever accounts that were there in 60-day DPD and 30-day DPD were reckoned, and the asset classification benefit was given to 60-day DPD accounts as of 28th February 2020, which would otherwise have become NPA as of 31st March 2020. Okay.
Right.
So which were otherwise NPA as on that date, that is 90 days past due as of 28th February 2020, were already marked down before moratorium was extended.
Right. Okay. Okay. And then now, sir, if I were to look at the collection efficiency, I mean, now every loan account is supposed to pay, right, for the month of September and for the month of October.
Yeah.
Now, within this, what was the quantum of loan that was raised? Let's say 10,000 crore was supposed to pay for the month of September and also October, and how many actually did pay?
Demand raised and paid. That's what I got.
See, what is happening is most of these cases, the demand gets raised after 31st of October. No, there is a time available till 10th of November for payment. Okay? Because most of these accounts where moratorium was extended were 30-day DPD and 60-day DPD accounts. Okay.
Right.
And then standard accounts, they continue to have the overflow. When we gave the moratorium at that point in time, it was around 66%. Okay. And now it has come down over a period of time to 33%.
Right.
And there is a substantial this one. So when we actually ran the notional run on NPA classification, we got around some figure of around 5,600 crores or so. So where we looked at, and then when we actually got into each of those accounts, most of the payments have come to us. Okay. And now it is getting reflected in the slippage ratio that we have actually shown in the September results. If you see the slippage ratio, it is around 0.08%.
That is irrelevant number, because what I'm asking is, people who have missed 30 days, this will not be reflected in your standstill slippages.
No, it is not. No, I'll tell you what is happening. That's what I'm saying. Again, I'm coming back. I understand your question. I am not talking of standstill here. I am talking of a notional running of an account where 30-day DPD payment has been missed. Okay?
Right.
When we calculated around 5,600 crores is something that we have found that most of them are falling in 30-day DPD and 60-day DPD bucket. Okay? So if you see the number, we have around, you can calculate yourself, around 9,200 is the asset classification benefit given to us. Okay?
Right.
Now out of that, 5,600 is the number that we have got 30 days, 60-day DPD where follow-up has to happen. Okay?
Right.
So within that also you can see out of 5,600 we have already recovered on 3,000 crores plus. The payments have come. That is getting reflected automatically in the numbers that we have given you.
Right.
So in 5,600, I don't see a great collection issues in terms of payments, because two things happen in those accounts. One is basically we have given an FITL where the payment due dates have been postponed. Okay. Another, we have given the EMI extensions where it got back-ended. So the actual EMI for these remaining 5,600 crores would start only in October. See, till September they are available. So the installment payment would start from October only. So the demand gets raised now and the payment has to come now.
Right.
Understood my point?
Yes, this point is understood. But I'm asking for the entire bank, sir. You are saying that for the entire bank, someone would have payment due on 1st, someone would have on 5th, on 10th, 15th, whatever. So for the month of September and October, how many people are paying on time, or maybe let's say with the grace of 7 days, or whichever.
That aspect, what we call, in our bank we call it overflow. Okay.
Right.
Okay. When standstill is applied, we call it overflow. So that overflow numbers I don't have readily. I can supply it to you separately.
Sure, sir. Okay. And second question is, sir, on restructuring. I think MD sir mentioned that around 5,000 crore has come for restructuring requests so far. And so if you can tell us, sir, I mean, how many accounts are there in that 5,000 crore, mainly corporate side? And does this include, let us say, I would suspect this would include Future, Shapoorji Pallonji, MMTC.
No. Don't speculate like that. MD sir has already told you that in terms of numbers, it is around 34 accounts for corporate. When we say corporate, it is 25 crores plus. It is basically the regulatory definition of corporate and retail. So 25 crores plus is what 34 accounts we have got. In these accounts, we don't have the accounts that you have just named, because most of them are actually they have not given OTR, because they are yet to pass the muster of OTR in the consortium.
Right. Okay, but so these are mainly your sole banking account kind of.
Yeah, mostly small accounts, 25 crores and above. Bada account, abhi tak, whether they are interested, they are not interested, we are not very clear.
Right. And this is the corporate side, right? 5,000. There may be retail also.
Yeah, of course. Retail is very small number. It is around 60 crores.
Right. Okay. 660 crores.
Yeah. Not 60 crores, only 60.
Okay, only 60 crores. Okay. And So, okay. So, and this, sir, what is your rough sense? So, this 5,000 crore would be roughly, let us say, 1.5% of your loan book.
Yeah, that's correct. 1.6, which I have already told you.
Right.
Yeah.
Right. But because of, let us say, there may be, as you said, people may be wait and watch mode. What would be this number? I mean, if you were to provide a range, let us say this 5,000 crore as of December end, based on your expectation of people, corporates wanted to get restructuring, how big can this number be?
See, the point is, I have actually been looking at these numbers and how the people will react going forward also. My view is something different. My view is most of them, they will not be willing to come for restructuring under the 6th August circular. Because it is possible that we may get them restructured under the prudential framework that 7th June circular of RBI and other measures like typically a repayment plan they may ask, or they may simply ask for reschedulement. I don't think there will be any uptick in the number that we have provided. We have also not really looked at the viability of these proposals that they have given in terms of, because I don't know whether they have really understood the downside of restructuring under the 6th August circular. So if the borrowers start understanding that downside of the circular, these numbers may not be there at all. Because there are a lot of issues in terms of how there is no concept of sustainable debt, there is no concept of long-term moratorium. Moratorium is very limited to only 2 years. So there are a lot of issues in terms of 6th August, the expanse of the circular that RBI has given. So mostly, people will be willing to go under the prudential framework circular, may get restructured. So at that point in time, downgradation will happen.
Right.
So I don't think there will be a huge uptick in this number, because the asset classification benefit one gets under 6th August circular is very, very stringent. So many accounts may not fulfill that criteria at all in the first place. And apart from that, you have Kamath committee numbers, which is much more stringent than your Tandon committee and Chore committee. Okay, so it will be very difficult.
And sir, this future group, I mean, what is our exposure? I mean, because there are a lot of...
Our exposure is around 1,400 crores on the asset side, around 625 crores on the investment side.
Okay, that's it. Okay. And sir, on this notes to account number 12, wherein I think these are the accounts which are already NPA, right? 10,000 crores, but you may have provided, you cannot refer them to NCLT. Is that the way this 10,443?
Yeah. This resolution timeless, see, most of them are power assets. Okay.
Right.
So these power assets, you remember there was Samadhan scheme and all that.
Right.
Okay. Under that scheme, these accounts are being reckoned, and they are being given extension of that 180-day reckoning period because of the COVID. Right. So within that period, if they don't get resolved, automatically they will go to NCLT.
Right.
Otherwise, I'll have to provide that 35%, which is much more stringent.
Right.
Okay, under the Prudential Framework Circular of 7th June.
Right. Right. And last question, sir, from my side. I mean, you have this restructured, standard restructured within that infra at around, let's say, 1,600 crore, of which power is 1,400 crore.
Yeah.
Can these accounts be eligible for one-time restructuring? I mean,
I don't think they'll come for restructuring here, my dear. See, this 1,400 crores is one account that I think, I cannot name that, of course, in the forum. So this is account that automatically continues, and it's a performing account as of now. So it will get upgraded going forward.
All right. Okay. Great, sir. Yeah. Thank you so much for your time.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. As there are no further questions, I would now like to hand the conference over to Mr. A.K. Das, MD and CEO, for closing comments.
Yeah, thank you very much to all analyst friends for interacting in detail about various aspects, minor details also. So it was a pleasure. If there is anything else required, we will be happy to share that with you, and our department will be in touch with you. I think any further information required, we'll be too happy to share that with you. Once again, thank you very much. Keep guiding us, keep supporting us, and wish you all a happy Diwali in advance. Thank you.
Thank you. On behalf of Bank of India, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.